Good morning, Rhinos. So welcome everyone. Let's get to it. How much fun do we have every single day? Cool. Let's give it a second for everyone to get in. Come on. And we'll see what's going on today. So let me take a sip of water while everyone gets in. Come on. It'll be fun. So Amy dipping into Rhino coin yesterday. I see you, Amy. Good job. It was really great timing because obviously today it's up a lot. All right, everyone in. I hope we have a pretty strong starting group. So it's funny because when you have a program like this, it starts off relatively small because it starts off with only the people you invite. And then when you open it up to people to invite other people, good morning, Amy. It starts growing a little bit further. That's fine. That makes sense, right? But it is in everyone's best interest at heart to both do well for themselves, but to be the reason someone else does well. So when you have a platform like this that so clearly is able to translate Wall Street to Main Street, those that are a part of it say, whoa, I think I found something here. Not only have I made money, but I actually understood what happened. I understood the market. I felt the market. I saw it go up. I knew it was going to go down. I knew it was going to go down. I knew it was going to go up. But it's a level of comfort because in any situation, if you could be given the ability to be more comfortable than those that you're in the situation with, you by default have a very, very big advantage. Because if you're in a room with a bunch of people that have an anxiety higher than yours, they're making decisions much more emotionally than you are based on your logic. Because you have the moment where you say, okay, I actually am comfortable with what's going on now. I see everyone losing money, and I'm not because I didn't buy anything, because I understood that see, when a market goes down, there are two people. Well, I guess there's three people, right? There's people that own stock that are furious. There's people that shorted stock, right? Like they bet it to go down, which are really happy. And then you have people that did not take a position. They were sitting on the sidelines waiting for something like this to occur that are wildly optimistic. Now, when you put all these together, you have quite a dichotomy. So the market came down, right? And now you have three different people, all with three opposite emotions. The person that lost money is furious. He hates the market. He thinks it's the biggest POS he's ever been a part of. He'll never be part of it again. He can't wait to sell. The person that shorted it on the way down thinks he's a genius, thinks the market's so easy. He can't believe he made this much money already being a part of it. What does he do next? Then you have the person that sat on the sidelines. I don't really know what happened. I kind of expected this to happen, but I have a bunch of money and I now have everything at a very, very low price. And I think I'll start nibbling. You have one person that hates the world, one person that loves the world, and one person that's rational about the world. Because the first two have to make a decision. They have to either buy or sell more. They have to go ahead and sell their down positions or cover their short positions, right? In the case of the person that owns stock that's down, in the case of someone that's shorted stock that's down. But the third person is the only person that doesn't have a decision to make. He does not need to buy or sell at that moment. That person has free will to do whatever they please. Now, that's not for us to say, okay, well, Anthony, if that's the goal, then we should never buy stock ever, right? Like the goal is to be in a position to go ahead and have to make a decision. That's fine. But in lieu of being in that position to have to make a decision, you are able to think completely clearly. And what's even more amazing when you're able to think completely clearly is if everything that happened was stuff that you already expected to happen, or you were open to happening, or you understood these were the options that could happen, right? Like if your kid comes home and is a stripper one day, you're like, well, I could have seen that coming because this, and this. Or if your kid came home and he went to Harvard one day, oh, I could have seen this coming because this, and this. The point is, there's many options of ways things could end up, but are you cognizant of things that led to it? Do you understand the reasons as they're happening? Because maybe you want your kid to be a stripper. I don't know. But if you want, you could definitely go ahead and push them in that direction by doing this, and this. And conversely, if you want your kid to go to Harvard, you can certainly push them in this direction, going this, and this. Therefore, and again, I'm a little sharp with the analogies this last week. I'm not on my right mind. So have fun with it, right? But when it comes to the stock market, when you see a stock that's up, you don't just say, oh my God, it's up. It must go up forever. And when you see a stock that's down, you don't go, oh my God, the stock's down. It must go down forever. Because what you're missing when you say that is everything, is 100%. You are 100% wrong if you ever say that sentence. Literally, 100%. You could not be more wrong. In fact, you'd have to try to be more wrong, and it would be difficult because you could not be more wrong. Because the market is not continue going up, and the market is not, this is down because this is down and it's going to continue to go down, because that completely discounts that a market is a market. It has people, it's buys and sells, and people are finite. Stock is finite. There is not an infinite amount of stock. There's not an infinite amount of money. There's not an infinite amount of people. Therefore, exhaustion is the only tool that you really have. Exhaustion, if you could track, monitor, and trend exhaustion, then you're not playing the stock market, you're counting the stock market, right? It's the difference between blackjack, right? Like when you're at the casino, you see a bunch of people play blackjack, and they usually look like this. Hey guys, let's go. No, those guys are idiots. That's what those big buildings are based on. And then you see the people at the blackjack table that just sit there like this. Those are the people that the casino hate, because those people realize that blackjack is a game that you can beat. Blackjack is a game that if you can count the cards, then you can put yourself in the best probability with high regularity, right? Because a deck of cards has 52 cards, I think, right? 52 cards. Each card has 4 cards in the deck. Everything 10 and over is worth 10. Therefore, 10, Jack, Queen, King are all worth 10. Ace is 1 and 11, and the numbers are worth the numbers. Therefore, if somebody, and the game is to get to 21 without going over 21. Therefore, if you know the cards that are dealt, you then know the cards that are left. If you then can see the card of the dealer in front of you, and you can see the card that you have, you then know the probability of the cards that still can come out. If you can calculate that probability with the probability that that number plus or minus is 21 for the dealer, you can then decide if the deal is going to bust or not. And if the dealer is not going to bust, you can then decide what your odds are in selecting that next card, because there's only a finite amount of cards. That's blackjack. Now you would say, Ant, you're probably really good at blackjack. No, I'm not. I'm so nuts in the head that I play roulette. That I think because my mathematical prowess, that I can go ahead and handicap the board. The problem is, unlike blackjack, roulette, the numbers are infinite. Everything's infinite. There's a ball and there's a wheel, and you spin it, and you never know where it's going to go. So you can sit there and say, okay, Ant, well, if it's 10 black in a row, it's going to be red. Is it though? Well, Ant, red and black, it's just one or the other. It's got to be 50-50. Yeah, but the part that you're missing is it's going to be 50-50 at the end of the lifespan of the infinite time frame of that board, right? Like you can flip a coin 100 times in a row, it could be 100 heads, but then you can flip it 100 times in a row, it could be 100 tails. The point being, the flip is infinite. You can just keep flipping, and in an infinite time frame, it should be 50-50. So is the stock market blackjack or is it roulette? Is the stock market blackjack or is it flipping a coin? The stock market's blackjack, because there is a finite number of shares, and you can look it up. There is a finite amount of people in the world. You can look it up. There's a finite amount of money in the world. You can look it up. And when you take all these things and put it together, what's the variable that you're missing? Emotion. When you're able to calculate all of the probability, the only thing that you can't calculate with a calculator is emotion. Now, you heard of, what was it, Charles Darwin or Isaac Newton, one of those really smart guys. And I believe it was the 1500s, there was called the thing called the tulip mania. And I believe it was in the Netherlands, and a bulb for this amazing tulip cost like $1, right? And then everyone's like, whoa, look at that bulb. I want that bulb. $1 went to 2, went to 3, went to 4. This is the chart of the tulip. because it got to a point that everyone needed the tulip. Everyone thought the tulip was the greatest thing. You could not be someone without this tulip bulb. If you didn't have the tulip bulb, you were no one. So in that initial speculation, the initial interest, it did well, right? It had a good base. All right, I bought it for 50 cents. There's a lot of people that want to buy it for $1. I made 100%. Okay. Well, the person that bought it for the $1, now for them to make 100%, they have to sell it to someone for $2. Well, there's less people that would rationally do that. So let's say the percentage of the people in population that would rationally do that is 1%. Well, that means you have to increase the population to go ahead and still find the volume of that 1%. 1% of 100 people is 1, but 1% of 1,000 people is 10, right? So if you want to increase the people, you have to increase, if you want to increase the number of that 1%, you have to increase the people that you're doing the calculation for. So the bulb spread and everyone was talking about it. And this guy, Newton or Darwin, I think it was Newton, pretty sure it was Newton, ended up being a participant. He bought the bulb like up here and he held it up here and he sold it down here. And at the height of the bulb, to buy one bulb, it cost 2 years' salary for a worksmith, right? Like someone that used their hands, a laborer. And the question you might be asking is, Anthony, don't tulips die? Like, am I losing my mind? Is it not a flower? Like when you buy a tulip, does it live forever? Is it the rose from Beauty and the Beast? Because even that thing died, right? It was the last petal. Well, the answer is yes. But the belief was that you could always find someone dumber than you to go ahead and purchase that from you. That you could actually purchase this tulip that's at the height of its beauty and it has 5 days left to live, and you'd still be able to find someone within those 5 days that would buy it from you, knowing that they were buying it at a higher price to sell it to someone at a higher price with less days available before that tulip died. Well, Andy, that's insanity. Like, why would anyone do that? Well, there's a lot of insane things in this world that people do. That's like, if your defense for something stupid is why would people do that, that's insane, then you missed the whole point of the world. Like, you've not been alive as a reasonable adult in your entire life. I could come up with 100 examples right now, from the most politically sensitive to the most emotionally sensitive, and give examples. And you would say, yeah, but. So when you understand that people do not act rationally, you've now taken a step forward in this world. Welcome to the world 2.0. Nice to see you. So when you go ahead and take the most sensitive thing to people, their money, this is what's in charge of their standard of living, the standard of living of those that depend on them, the life that they're able to afford, the life that they're able to aspire to, the food that they eat, the clothes that they wear, the way they look, where they live, their day to day, their minute by minute, their second by second, everything comes down to their money. You take that and you throw it in a pit with everyone else in the world with the same tools. I have money, you have money. Now fight. And the battleground is the stock market. Well, I'm going to buy this stock because I think it's going up. Well, I'm going to sell it to you because I think it's going down. And what's wonderful about the stock market, which is why here in America we love football and not football, is because the game ends with a winner and a loser. We in America do not like ties. I don't like a tie. I don't even wear a tie, right? Like, I don't like ties. It baffles me in a sporting competition. You have two people walk in and they both walk away as winners. No, one's a loser, one's a winner. And that's the stock market. And when you go ahead and you tie the most sensitive thing to everyone with their highest emotion, that if I could just be right, I could buy this house. If I could just be right, I could go ahead and buy my fiance that wedding ring. If I could just be right, my kid could go to school. If I could just be right, well, these are things that people want. Here's the alternative, though. Those same people only think of the good things. You know, when they think about the bad things, when they're not expecting to think of the bad things, right? Like, you never buy a stock with the belief, oh my God, this is going to go awful. I'm going to buy this stock and I'm going to lose 50% of my money. I'm going to do this and I'm going to end up bankrupt. You know why people don't think of that? Because why would they buy a stock if that's what they thought? But here's the problem. If they're not at least cognizant or emotionally stable enough to understand that that is a possible outcome, what happens when they're faced with the situation where their stock is going down? What do? Well, they look for answers, right? Like this isn't rocket science. Oh my God. I bought this stock because I believe this and it's down. Okay, let me chill out. Let me calm down. Why is it still going down? It's still going down. Okay, fine. Let me look at the charts. If it breaks this trend line, and okay, it's still going down. CNBC. Okay, CNBC. And now CNBC, because they're a television network and they work on ratings, just like every newspaper and media outlet in the entire world, which means that the media never works for you. They work you, right? Like you are not the client of media. You are the product. Understand that. And now welcome to the world 3.0, right? Like we're doing really good here. You guys. Anyway, so once you completely understand that, then you go to CNBC, and you know what? The people that don't know that, they go to CNBC because they think, oh, I'm at the church of, and I'm at the altar of finance. These guys, they're like CNBC. They know everything about stocks. Okay, let me watch CNBC. They'll give me some answers. I think the world's going to end. I can't believe people were dumb enough to buy stocks. The Fed's going to raise rates. War is coming. Ukraine, COVID, Omicron, Pokecron. Let's just make up new variants while we're at it, right? Like, let's just do that too. Oh my God, this is so bad. I cannot believe I bought. Oh, and it's down again today. Oh, okay. I'm down 50% on my money. What do I do? You know what? I was too emotional today. Let me watch CNBC some more. If you did not sell yesterday, you're an idiot. Bitcoin breaks trend. Inflation's at 7%. The Fed's going to raise rates every quarter. Oh my God, what am I going to do? Lose all my money? Now, at this moment, this person completely is off the handles. In fact, you can convince this person to go sit on a corner and do really nasty things for really nasty people for really nasty stuff. Like this person is completely hypnotized by fear, right? This person walked into a situation, believed that they knew everything, came to find out that they did not know nothing. And I know there's a lot of negatives. It's called alliteration. Stay with me. And now they're completely at the whim of suggestion. Anything that a credible person tells them to do at this moment, they're going to do. Because the goal of what this person's looking to solve is that churning feeling in their stomach, that feeling that they're a loser, that feeling that they just threw away their family's livelihood, that feeling that they're to eat tuna fish once a day for the next year, that feeling that now they don't even know what to do. They can't tell their wife that they just mortgaged the house. They can't tell their children that they just put out their college fund. They did all this because the belief was 2 weeks ago on that same network, CNBC, that same world that they lived in where everyone was telling them to buy, they thought, well, if everyone did it, the law of averages, and everyone can't be wrong at the same time. This person knows nothing about the stock market. So where are we going with this? What does this all mean? Because the stock market is a finite amount of stock and a finite amount of people and a finite amount of money and a finite amount of everything, and the only variable is emotion, then emotion is what causes the marginal direction, right? So for instance, a company is really great, people own it. That makes sense. Okay. What brings the stock up from there, right? The company's great. Everyone that knows the company owns the company because they know the company's great. Cool. What puts the stock up from there? Analysts, people that own the stock. Everyone has a self-interest. So if I own a stock and a stock goes up because someone buys it and I want my stock to go up, it behooves me to go ahead and be a disseminator of information that mobilizes people to buy the stock. In fact, if I own a stock and I can convince 1 million people to own the stock, then conceivably the price of the stock is going to be higher after that millionth person bought it. And even more so than that, the first 999,999 people that bought it all would have made a profit because each person bought it at a subsequently higher price, which means they're all now telling other people, you should buy this. I got a tip to buy this. It went up for me. It's going to go up for you. Now calculate that to infinite. No, you did it, to finality. There's a finite amount of people. So how can you measure when everyone effectively bought the stock? Because as you can recall during these calculations, that the second that the last person that possibly could buy the stock bought the stock, it cannot go up any higher by mathematical rule. It can't. There's no one left to buy it. So what does that sound like? What does that sound like? How do you know when that happens, right? Because by definition, everyone is like the most excited they've ever been. In fact, everyone that bought it wants it to go higher. So nobody that bought that stock is willing to even conceive that, oh my God, guys, get it. I bought it. Everyone I know has bought it. It's such a great company. Everyone owns it, which means there's no one left to own it. So let's all watch it go down together. Are you with me? That doesn't happen. These people don't even know that that happened. But you know how you know when you're driving in a taxi or an Uber and your Uber driver says, I just made $1 million on Bitcoin. You know everyone owns it. When you're at the grocer and your grocer is saying, oh, do you hear the short squeeze that's going to happen in AMC? That's when everyone owns it. And that's not to go ahead and belittle these positions. I will always say an honest worker at an honest job is a hero. That's my opinion, end of story. But there are jobs that, well, not but, because I didn't mean to negate that first half. Each job has a particular skill set. The skill set of a hairdresser isn't a financial wizard of the world, because if they were a financial wizard of the world, law would say that if they can make so much money doing this, why are they doing this? Oh, well, they're just passionate about hairdressing, so they only make $50,000 a year when their skill set can make them $500 million a year, right? Like, I don't buy that. I think maybe one or two people do that, and God bless them. But I don't find that to be the norm. People do what's in their best interest. Therefore, if a hairdresser is giving me financial advice, I know I can rule out because they're the financial wizard of the world, which means being a hairdresser, as great as that position is, probably means that at some point in life, well, not really, like you could be a hairdresser and aspire to be a hairdresser, whatever. But what's the attributes of a hairdresser? There's someone that's they're client facing, right? Their clients come back to them, which means they're likable, which means they're fun loving, they're friendly, they're gullible, they're this, they're that, they love life. They see a butterfly and they're like, butterfly, butterfly, butterfly. And not because I'm saying, oh, they're like, they don't have a mental intellect. No, they're client facing. People do not go to pissed off hairdressers. You know why? Because why do you want someone with two knives in their hand connected next to your head? You wouldn't. You want to go to a hairdresser that, like, they could be nuclear holocaust, and that hairdresser's like, oh, did you see the shooting star last night? And you're like, that was a nuclear bomb. Nuclear bomb, nuclear bomb. You're going to love this hairstyle, right? Like, that's the hairdresser you want. So that hairdresser I would not take financial advice from, but I would love that hairdresser. In fact, when I was younger, there was a certain code amongst guys that if you date a hairdresser, you're in for a fun dating experience, right? And I'm not going to get too much into it, but they were just fun-loving people that lived for the day. So you wouldn't take advice from them. But if your hairdresser just made a ton of money on stock that they're giving you advice to, that's when you know you've reached the top. Because if your hairdresser got the tip and acted on the tip and made money on the tip and is now telling everyone that sits in their hairdresser seat, who's left to know? Everyone effectively knows. And at that point, what does the nation feel like? What's the world feel like? It feels great. It's a really fun place. Everyone's happy. Everyone's making money. Think about it. Everyone owns it. Everyone made money. Everyone is now buying cars and buying houses, and nothing could be better. Inflation's going up because you feel confident in the money that's in your bank account and in your stock accounts. You're selling some of it, taking the money, putting it into the economy. Yes, my hairdresser gave me a tip and I made $10,000. I could go buy $5,000 worth of anything I want at any point. Like, things are good. Great. So at that point, you feel quite comfortable. You might even take a mortgage. You might say, I'll just buy this stock. Why not? And everyone on CNBC is telling you that the stock's so good. Everyone's happy. I've been in the market long enough to know that that is the scariest situation in the entire world. It is If I could track how many stock market gurus send me newsletters, I think I could track the price of the market. Like if you go ahead and get 20 stock market letter gurus in a given month, like these guys are so, like for $37 a month, they'll teach you how to trade $1 million. Run. Like everyone is like, that's the hairdresser. Run. When you receive none of them, it's kind of like the middle. When you receive all the ones that are like, you better buy gold, the world is ending, and Obama's dating a man named Michael Obama. Like when you see crazy stuff, that's probably when you should buy, because everyone's like, whoa, things are really bad. I don't want any part of that, right? So take this and you realize that everything anyone's ever believed in the stock market's actually opposite. And if that's the case, that seems like an easy fix, right? Like, okay, what you believe, just turn it upside down and you're good. So why doesn't anyone actually get that education? Why doesn't anyone ever understand that? Why has there never been someone on TV that simply says, hey guys, bop, 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 right? Because it's not, again, you're not the client, you're the product. There is nobody out there, short of Rhino, that cares that you make money, that cares to help you. You are not, no, and I say short of Rhino because it's a free platform, right? CNBC, you think is a free platform. They're not. Their ratings are what they're paid on, hence you're the product. So when the market is at these all-time highs, everyone buys the stock. Okay, so where are we going with this? Because I feel like I trailed off a little bit. So let's kind of rein it back in. So for the last 2 weeks, you've seen that person lose the money. What do I do? Lose the money. What do I do? CNBC, lose the money. What do I do? What do I do? And how do they stop it, right? So when do they get to the point where they say enough's enough? I was the fool. Now, what's upsetting about this is that's like your blue collar guy. Like that's your working man, working woman. The person that got in the stock market up here from their hairdresser, think about who goes to a hairdresser. It's not the wizards of the world. It's like the soccer mom. It's like the 9-to-5 dad. It's families. It's these people that say Wall Street is rigged. They want no part of it. But when they see people that are just like them, all 9-to-5 blue collar people that got sucked into the game that are making money, and they see that their neighbor has a nicer car than they do because they had the courage to bet on America and play the stock market, they get sucked into it. And you know what happens when they get sucked in up here? Well, these are prideful people. This is the salt of this nation. These are the most important people this nation will ever produce. The person that actually works for a living, the person that builds the family, because this nation is going to live and die by how we raise our children, by the education we allow them, by the standard of living that we instill on them, the house that we allow them to grow up in. So when that father, when that mother buys that stock and it starts going down, what do you think they do? Do they call their broker? They don't have a broker. They don't have a stockbroker. And if they did, the stockbroker knows the stockbroker is less intelligent about the stock market than his clients. You know how I know that? Because I was amongst these people. You know what they do? They go ahead and they practice sales techniques. They have sheets. They read it in a boardroom. They practice sales. And then they say, guys, what are we pitching today? They get a sheet, Teledyne. Okay, Mr. Jones, this is why you should buy it. And when it goes down, they stop taking your calls. And when it goes up, they tell you how great they are, charge a commission and do it again until it goes down. So good thing that these people don't have brokers. And if they do, they're getting bad advice to begin with. So what do? Well, they go to their friend, the hairdresser, right? Oh my God, I bought that. And they don't say it right away because they're prideful. They're men. You know, yeah, took a bit of a dip, but I know it'll come back because things always go back up, right? Right, yeah, no problem. Okay. Now the hairdresser obviously agrees with that because the hairdresser owns it at a lower point. The hairdresser has built-in profit. The hairdresser's like, I've seen everyone make money. I'm not gonna run scared. I'm a man. Like, I don't run scared. Oh, right. So they go ahead and allow their stock to go down a little bit because they're still profitable. And because they didn't sell, what's the sentence that they say to the person in the chair? I mean, listen, you do what you do. I'm not telling you what to do with your money, but I know I'm not selling. So the person in the chair now has pride on the line because they have nothing else on the line. They're a 9-to-5 schlep that has no money to their bank account, is seriously just trying to take care of their family in an economy that's never taking care of them. So they have pride. Good for them. So they don't sell it. Then it goes down further. What do? Now they're secretly kind of like uncomfortable, right? And now the person that gave them the tip, the hairdresser, is getting close to the money they put in. They're still a little profitable, and they get that haircut. Oh, yeah, the stock market, right? You want to win big, you better bet big. You got to take on risk, right? All the lines that we've been fed. I'm not selling it. Now the person that's getting their haircut's like, I'm down like 10, 15%. Like, I really can't tell my wife about this. I really can't tell my husband about this. Okay, whatever. It's Apple, right? Like it's Tesla, it's Facebook, it's Google, it's AMC, it's GameStop. You know these names. It's NVIDIA, it's Chipotle. Can't go bad. These companies aren't going out of business. And that's what they tell themselves. Because at that point, they've already lost all sanity. Because a business going out of business means zero. The stock is at 300. There is so much space between that and before the business goes out of business. So to simply say the business won't go out of business does not mean the stock's not going to go down, but they convince themselves. They're insane now. They've lost all concept of rationality. Now the stock's going down more. Now that hairdresser doesn't even want to talk about stocks. In fact, that hairdresser doesn't even go to work anymore because every person they cut the hair for bought the stock. In fact, the hairdresser is sitting home wondering what they should do. The person that goes to the shop no longer sees the hairdresser. Oh, they had a day off. Now they're calling, not picking up the phone. All right, what do? And they allow this thing to go lower and lower and lower because they have too much pride. They don't ever want to say that they bought the stock that went down. And it's actually easier to go ahead and internalize that pain by allowing the market to come down and allowing it to make the decision for you, because the decision is the hard part. The decision to go ahead and take a loss is the number one hardest thing you could ever do in a market. And in fact, it's so hard that people are willing to lose all of their money for the market to make the decision for them. So when it gets to the point that the person feels, you know what, I put in the last $10,000 I had in my account, and it's down to $3,100. I don't know what the fuck I don't know what I'm gonna do. I could pay mortgage maybe one more month. But I know I can't allow it to go into this. You start hearing that. So what do? They sell it. Now, when they sell that stock, it's not that they're the oracle of the universe. What always happens after they sell that stock? It then goes back up. And I know that, and you know that, even though we're talking about a fictitious person in a fictitious world, we all know that to be the case. You know why? Because human behavior never changes. It will always be exactly the same. When that person says enough is enough, they are representative of an entire shareholder base that also is saying enough is enough in the same moment. And how do you know that's the case? Because you see a stock go like this, whoosh, straight down. And you know how you know that's the case? You see the volume do this straight up. And that's what we call a capitulation day. Now, when you go ahead and when you go ahead and absorb the story that I just shared with you, it's a story that we all know. We all know the person, and it was probably us at some point. I know it was me plenty of times in my life. In fact, when I sell something, I don't even look at it on the screen anymore because I know it's going to go up. I know 100% of the time it's going to go up. In fact, I sold Etsy yesterday 152, 153. And I knew at the end of the day it was going to be higher as 157, but I didn't care because we just got out of a war these last 2 weeks and we got out of it profitably because we were able to manage it the whole way. The point of the story is, if you're able to logically deduce based on calculations of what is known and then accurately and logically manage your emotions to put yourself in a point where you're able to make rational decisions, you'll always win. Not win every single trade, but over the history of them, your participation in the market will be a positive one. Because all you need to do is remove your emotion. One thing, remove your emotion. That's it. Now you would say, Ant, that's like, how do I do that? It's really tough. Well, that's what Rhino Wealth is, right? So we went ahead and built an insane algorithm that people email me every day. And how do I get access? How do I get access? How do I get access? And I said the same thing. You don't, you can't, right? Like, I'm not giving that out. I built it. I don't even know how many years doing this. I'm a pretty smart person. I could code. I built the algorithm. And because it's in my belief of everything I just said to you, right? Everything I just said, take all of that, put a numeric value to all of that, identify the proper calculations that all of that fits in, that's Rhino Wealth. I already built it, right? On top of that, okay, well, that's one thing, and well, how does that work? Well, it removes all the emotion and allows everything that we just spoke of to be calculated. Okay, it doesn't really solve anything, right? Like, it definitely helps, it's a good tool. But what about the human aspect? Because humans like to gamble. We like to know what we're doing. In fact, if given the choice between kissing, right? Like if I came up to you and said, think about your number one celebrity crush. I'm going to give you the choice between kissing that person or kissing a mystery person. Do you know less than 100% of you would kiss your celebrity crush? Do you know it's actually statistically relevant that 17% of you will go ahead and kiss the mystery person without even knowing who they are? Having no clue, face against the person you would do anything for, that you go up and post it on their wall, you'll still kiss that person. Because you're human, you live once, you want to be a part of it, you want your blood to flow, you want the excitement, you want all that, and that's not bad. When people say, oh, you know, when people get into the stock market and they're just looking to gamble, like those are the people you got to throw away. Not really. Anyone that says the market's not a gamble is like cuckoo for Cocoa Puffs, right? Like, I'm putting money in, maybe the World Trade Center comes down. I don't know what's going to happen tomorrow. I know that over the course of my history and of course of my future, that if I do and live by certain sets, I'll have an outsized probability to be right more times than not. That's the agreement I'm making with the stock market. And I have lost money many. In fact, when we show you our history, just since November, when we started this, I think we have 4 different trades that lost 60% or more. We have like 25 trades that made 40% or more. But if I'm so smart, how do we lose, right? Like, how do we lose those trades? Well, we could look back and say, well, this. And those are the things that we take and bring with us going forward and say, okay, I'm going to keep applying this, because the market is the most beautiful creature in the entire world. It is literally the collection of everyone's biggest fears and their aspirations and their goals and their worries. It is everyone's thoughts at 2 a.m., 2 p.m. It is everything of everyone illustrated in the most competitive win-loss fashion. The stock market is the pinnacle of human beings. It is the number one most beautiful thing that I think it's the most honest thing I think anyone could ever imagine. It's just money. And you might say, well, the market's up and it doesn't deserve to be, or it's down, it doesn't deserve to be. Well, then you're crazy, right? Like, the market is always right. There are people that bought that stock at that price. Just because you don't understand why they bought it doesn't mean that they didn't have a reason for doing it. The fact that you didn't understand it is why you're going to lose money, because you think you're smarter than the market. You're not. The market's always smarter than everyone. You have to be able to respect it, right? So all that being said, so you have this amazing algorithm, that's the tool that you could go by, but you need to have a steward. You need to have the person that's manning the ship that says, hey guys, look at this. Now tell me if this makes sense. Let's talk it out. This could be this, or this. And if it's this, we're going to know it by this. If it's this, we're going to know it by this. If it's this, we're going to know it by this. Take that, multiply it by 100. And that's what Rhino Wealth is, right? Where we can go ahead and say, you know what? I remember when Tim Cook was hired to Apple when Steve Jobs died, and how that story meant something to this earnings quarter, because there is no algorithm in the world that's going to tell you that Tim Cook was initially spoken poorly of because he was a supply guy. He was able to go ahead and work the supply chain. Everyone didn't like him because he wasn't Steve Jobs. He wasn't innovative. Well, now in a world where supply chains are cut left and right, that's the guy you wanted. That stock was 100 and what? 56. They went to 174 in a matter of a week. The biggest company in the world, a $3 trillion company. Every one of those points is worth over $50 billion in market cap. Did we get that by accident? And even still, we said, we don't know what the earnings are going to be. You cannot handicap the market reaction. So we went ahead into Etsy because we believe that offers a higher probability. And those two Etsy trades each did over 40%. Now, the second one, I only did 7% on it because I wanted to sell it, but that does not mean it didn't do 40%. In fact, the one we did sell at 48% went up 300% yesterday. Am I going to sit here and take my computer and throw it out a window because I didn't capture all that 300%? No. Leave that to smarter and dumber people than I. If you believe you are always going to get the bottom and you are always going to get the top, you're insane. And you are not allowed to be in the stock market. I feel like we made a lot of rules today. I feel like you're a 4.0 human today. So let's go ahead and take a look at the stock market because I have no idea where it is. But you know what? I have no stocks. I have all cash. I am sitting in just cash. And although that we don't suggest, recommend, or tell anyone what to do, we are cognizant that there might be someone that says, okay, Anthony did this. I, on my own free will, want to copy him without his consent. I can't control you as a human being. And if that person does exist, I know that that person is profitable, probably way more profitable than I, because I've seen people's emails and how much money they've made. And I believe that they're in cash too. So I believe the overall consensus of Rhino Wealth right now is we are looking good because we just spent 2 weeks where that person spent all of their life savings, getting tips from hairdressers, all of CNBC, went ahead and enslaved the population by feeding them information, by making them their product. The whole world hated everything, and they all sold. So what happened to the stock market after everyone sold? Well, let's go find out. So la, 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 la. All right, so let's see where we are today. And it's 10, you know what? Can you stop Zoom? I'm on it. All right, so it's 10:41. 10:42 right now, right? So we have 18 minutes together, which actually is enough time. So where's the market today? Down, okay. Down 26, down 13, down 75 on the NASDAQ. So it seems like it was a good idea to sell yesterday. Now, why did we sell yesterday? Well, we said we were profitable. We just spent 2 weeks in war. And you always live to fight another day because the market is going to be around longer than you and I, right? I don't need to justify my existence in the market by being subservient and hostage to it by my own ego needing to make a big profit. We were profitable over the last 2 weeks. We made 4 different trades that were profitable. We made 1 bear trade, and overall the account was profitable during a time that the market went like this. We were profitable in buying things that was profit when it went up, which is really, really very impressive. Now, we also said, well, and I don't think we said it, right? But like, I'll share it with you because I did talk about the volume and we are going to get into it today. But I said that at that point, when it comes to the market, the volume is the lie detector test. That to go ahead and to believe this buying to be real, it better be on increased volume. Otherwise, it's just a dead cat bounce, right? Like everything went down all the way. You had footing. We identified it every single day last week. Look at the low. It went down 1,100, reversed up. The next day went ahead and tested that low. The next day started higher and reversed down, but did not get to that low. The next day did the same thing. Earnings were great. Reactions were great. This is something to shoot against. Buy, buy, buy. We said that. Sid says, why did you stop considering Netflix? Good word, considering, because we don't recommend or any of that. Netflix, we got out of before their earnings. Netflix, we made a 40% profit in week 1. Netflix earnings destroyed the stock. It was at 600, went down to 300. And actually on one of these videos, you would see that Netflix, when it was a 18 red and green, we said, whoa, maybe we'll step back into Netflix. We did not. We made money on Etsy. But we did identify Netflix as a position that if you were looking strictly on the algorithm and strictly on the capitulation, wasn't the worst idea. Netflix had a guy, a very, very large investor, Bill Ackman, come in and buy 3 million shares of the stock. He's now a top 20 holder. That provided enough confidence to the market to that they could then buy Netflix. So we went ahead and made money while it was going up. We got out of it before it went down. We identified it while it was down that this would be a moment that if those want to get into Netflix, it was a good price point. And one of the largest investors in the world, then purchased it at the same time that we said that. And the rest is history, right? So I don't know how much more we could have done with Netflix, but to each their own. There are people in here that bought it, and God bless them. All right. So what we were saying was the volume. Because last week was obvious, and we said it every single day. It gave you a base. Professional money managers say, okay, there's the foundation. If it goes under this line, I'm out. But as long as it's over it, I'll take free shots to the upside. And we believe between that and a short squeeze where everyone's betting on stocks to go down. So for the new people, what's a short squeeze? So when you think a stock's going to go down, it would behoove you to short it, right? So when people think a stock's going to go down, they sell it. I don't want anything to do with it's going down. But if you think it's going to go down, well, why don't you make money on it going down? And the way you do that is you borrow stock from someone. So say you borrow ABC stock at 10, you then take that stock and sell it immediately. So you come into 10. Now, if you're correct and that stock goes down, say it goes down to 8, you then take that 10 that you have, you buy that stock back. It only costed you 8. You take the stock you borrowed, you give it back to the person you borrowed it from, and you keep the margin, which is 2, right? You sold it for 10, you bought it for 8, you put 2 in your pocket, they have their stock, the market's happy, everyone's fine. Well, that's what people do. They short a market that goes down. And because people believe that when a market goes down, it's going to continue going down, especially when they watch garbage like CNBC all day, they get sucked into, wow, and the whole world's going to end. Look at CNBC, the smartest people in the room. They're telling you that there's going to be all these rate hikes and blah, 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 blah. Therefore, I'm going to short the market. Well, what happens when the market then goes up? Yeah, I borrowed stock from that guy at 10. I sold it. I have to replace it to him. Now it's at 11. Now it's at 12. Now it's at 13. Holy effort. Let me buy that stock back. I got to give it back to him. I have to take the 10 I got, plus I got to take 3 out of my pocket and buy it back, which means I just lost 30% of my investment. I lost money on the stock going up. Now, if everyone is short the stock, which is very easy to see with a market that goes like this, what do they have to do when the stock goes up? They have to cover it. Well, when one person covers it, what happens to the price for the next person to cover? It goes up. Because when you buy a stock, it goes up in value. So if everyone's covering their stock, the stock is flying because you have artificial buying. This is mechanical buying. They have to buy. And the short interest is displayed. You could look that up on NASDAQ.com or wherever. Again, it's something you can calculate. So when you see, and that's what happened with GameStop and AMC a couple of years ago, when you see a stock has a short interest, really, really high, you know that if this stock goes up, those people have to cover, which means you can buy it. Now they have to buy it. You can buy more. And the stock only has buyers. It doesn't have sellers at that point, which means the stock's going to fly. Well, if that were to happen to a stock market, what does that look like? It's called a short squeeze, where the stocks go like this, and then boom, right? Like, how did that happen? Oh, what changed overnight that made that stock go like that? Well, everyone had to get out of it. Everyone had to buy it. Therefore, when you take a look at a stock market going up after it goes down, you have to look at the volume. Is the volume only the people that are covering their stock because they're the dumbest people in the world? They will always go ahead and they're the suckers. They're the ones that got it from the hairdresser, right? Is the volume only the hairdressers, or is the volume actual investors saying, no, I get what's going on, but this is the point, let me get in? Because the market's a self-fulfilling prophecy, right? The market goes up on buyers and down on sellers. So let's say the market is the biggest POS ever. Everything's wrong, but everyone's buying. What's going to happen? The market will go up because the market's only a function of buyers and sellers. You believe it's correlated to the economy. That's what makes sense, right? Why would I buy this if it's not worth anything? Therefore, economy and market hold hand in hand. Like, they are congruent. They are parallel to each other. But that's not always the case. There's plenty of times where just market emotion got out of hand, right? So in a short squeeze, the market emotion gets out of hand because everyone has to buy just because they have to buy. Therefore, you have to be able to monitor, is that buying real buying or is it just short squeeze buying? Because if it's just short squeeze buying, that's going to come back down because that's not real buying, which offers you an opportunity, which is what we said yesterday. Not in those words, but we said that in volume. We need to see the volume. And we explicitly said yesterday, if you're buying stock today, you're simply gambling because we don't know the volume of yesterday. Huh. My phone says I'm almost there, that I'm going to. Sorry. I give my phone a little bit of like, I press a button and all of a sudden it wants to talk to me. Anyway, I'm sorry they just saw that. That was kind of crazy. So let's see what's going on with the volume, right? Oh, I was going to present. You know, I got to stop talking. There's so much going on. Oh, look at Etsy. Down 5. Now, for anyone that held it yesterday, great. But if you didn't sell it at the end of the day, what happened? You're back to before where we even sold yesterday. That's not good. Apple's down, Tesla's down, Microsoft's down, Netflix is up. So I see what Sid's saying. Okay, so let's do some homework, right? What's the volume yesterday? Let's put some volatility on this thing. This is a monthly chart. Let's pull a daily chart. Okay. Let's make it look nice, nice, nice. Okay. So what do we got going on here? What is going on here? Okay. So over here, we noticed that the actual NASDAQ, like the whole market, was 10 red and green. And in fact, I believe this was red that day. It changed at the end of the day, but we said, when a whole market is double-digit red and green, like, come on, right? We had our capitulation day here, right, where everyone, all the hairdressers sold. And by the way, I'm using the term hairdresser now as a figure of speech, right? Like, because I told that story, we understand what the word hairdresser represents. It does not represent actual hairdressers, right? Like, as long as we all know that. Because I'm not just, oh, Anthony cuts his hair, so he doesn't like hairdressers. I love hairdressers. In fact, some of the most fun I've had in my life was with hairdressers. Anyway, so this is the capitulation area. How do I know it? Because look at this line. It's really large. It went all the ways down. And look where it ended, all the ways up, right? These people opened here, sold it here, and then the market ended up on the highs, which means everyone that sold that day hates their life. I finally sold it. I couldn't take anymore. And what happens? It all goes up from there. Now, look at the volume. Look how much higher it is than every other day. Now, if you were to say, Ant, you know, you're really smart, not really smart, but you're really experienced, so you can see this stuff. You know, I'm a hairdresser, right? Like how I understand I cut hair, but I also want to become more familiar with the market because I got sucked into it. I lost money, but I'm totally competent to learn it and I'm interested, right? Well, welcome. How can I see that like you did? Well, that's why that line's green. See, what you got to understand is every word that I'm saying, I've already calculated into numeric values. So the story that I'm telling you, it's not Anthony's story time where he's describing a market to you. Anthony's decoding and translating computer and numerical values to tell a story that you can understand and now you can visually see it, right? So that's what this green line is. We call it a trend change bar. Now, did I make this green today, right? Like, before I got on live, did I say, oh my God, you know, it'd be great if I could call this bar a trend change bar, make it green and show everyone how smart we are. No, that's what dirtbags do. I would never do that. In fact, everyone that's here knows that this has been green the entire time. And if that's the case, well, how the heck did you nail that? I remember every day over here, I was told to go sit in a bunker and buy spam because the world was ending. And you, with one color, was able to go ahead and say, this is where you buy. Like, how? Well, a lot of money was lost in my life doing this, right? So just know that my tuition for this education is more expensive than you could ever imagine, but it's over. I know it now, so I want to share it. So the volume, the volatility, and the price, right? So look, we'll always talk about that. So when the price is down, the volume's up, and the volatility's up, well, that means a lot of people are panicking. A lot of people are panicking. Then more and more people are panicking. They're all panicking, and the stock's going down. That sets up for like a boom kind of moment, right? So, and then we saw it, and we saw volume going down, price going up, we saw volatility coming down, but where are we now? Now, the number one thing that we said yesterday was this volume. If this volume was not higher than this volume, we are not buying anything. But we said if it was higher, we would buy something. So what am I going to do? Buy something just so I could like have good content today and then wonder why I look like a moron tomorrow? No, I'm not going to buy anything today. There's nothing to buy. We see the volume down. Yeah, volatility's down, but who was the volatile people, right? Who were these people that were so volatile? Well, the hairdressers. Well, yeah, volatility's down from them because they're all out. They sold. They're not volatile anymore. They're not even looking at the market. They are not looking at the market. Volatility's down. Okay. What about these people? Well, now you have a whole bunch of new people that bought, right? So now these new people feel kind of good. They feel kind of sexy. Okay, cool. So volatility is going down, but volume's going down. You know why? Because these people that bought are not the whole market. These people that bought are presumably the people that are either short covering, right? Like they had to buy their stock back, or they're just dipping their toe in. Let me see what goes on. None of this tells you that this is real. Now it can become real, right? Like we're not saying that this negates that this is a real move. It negates the probability that it's a real move. And until we see that probability, we're not going to just jump in for the heck of it, right? So what are our possible outcomes? All right, so the market's up, volume down, volatility's down. So people are feeling good. They stepped away from the market because you can see the volume's down from over here and over here. So less people are in the market, but of those less people, the people that are in it are less volatile. Now, who are those people? These people sold, right? You can see it's here. These people bought. So there's less people in the market and they're less volatile because they're all profitable. Okay. Even less still. Now, this does not denote today. Today's only been around for an hour and a half so far. So this bar is obviously going to be less than this bar. But I would tell you that I believe that this bar is probably going to be lower still, unless this market collapses and then this bar is going to move much higher. I do not believe this market's going to go up and this bar is going to be higher. And that's my own personal experience, but also, hey, Anthony, we don't all have the experience that you have. What makes you say that? This. I don't see volatility going down anymore. In fact, I see volatility stabilizing. Everyone that felt comfortable is not feeling as comfortable. They're not feeling more comfortable, but they're not feeling less comfortable. They're still there, right? Because the stock is going up still, but is it? I don't see it going up anymore. In fact, I see it starting up and it's actually less than where it started. This volume, again, we don't know what it looks like at the end of the day, but it looks like it's going lower, right? So if the price stays flat and volatility stops going down, but now it's regrouping and staying flat, and the volume's going down, that's really bad. Like, that's not good. And when you go ahead and put a behavioral science cap on this, and it's 10:58, so I'm going to leave it here. And tomorrow, I'll introduce what we were going to talk about today. Well, gold, right? So I'll describe it more tomorrow why I say gold. But gold is one of the top 5 things I will have in a portfolio if I was putting 20% in every position. And it's not gold like you should always own gold. No, that's stupid. You can look at the price of gold and see it for decades didn't move. Gold is a hedge on government and financial instability. I think we have that. I think this year, the midterms are going to be a political environment that's going to be one of the most disastrous, vicious times this nation's ever seen. I think that people are going to be very upset this year. And I think that it's going to protrude into our political system where people's belief in government and belief in banking and belief in currency is going to be tested. I believe 20% should be in gold. Now that's gold and or silver. The way I think it should be done is not by buying it in your stock account. Go to the coin shop and buy what I'm doing is buying silver quarters, right? Like before 1964, the quarters were actually silver. Just buy them and put them in your house. Put them away. Don't mix them with your regular quarters, because if something ever were to happen, you now have a denominable precious metal asset that you can trade back and forth. That's just my opinion. We'll get more into it tomorrow. But anyway, oh, Michael saying how's crypto? Mike, I'm a little bit under the gun because it's now 11, but let me see if I can run through real quick. So my final thoughts, right? Like the in summation, right? We're not going to buy anything. We believe that the market's going to pull back. We don't know by how much or for how long, but we would not be buying something in front of that. So we're going to start looking at new things we can get into. 5%, I love that, Rod. I would do 20%. So maybe do 15% in your actual home. Again, it's one of those things where precious metals, when they go up in value, is conceivably the time that you would not have access to them, right? Like if gold or silver went up really high because people lost access to the banking system, how do you go ahead and sell your gold or silver stock for money, right? It's like one of those things. The reason why they're so high is because no one has access to it. So if you buy it in an account that you fear you might not have access to, well, then it doesn't matter that it went up. You know, you don't have access to it. Ravi, I'm gonna post it, and I know I just said that like, yeah, I always do it. And I know the reason I say this because I know I've been forgetting to do it. I will, I promise. Okay, but the consensus is we're not buying or selling anything. We're staying in cash, and we're gonna look for our opportunities. And we believe tomorrow might be one of them. Let me jump over to the crypto world. Ooh, crypto's looking good. I mean, it's going up, right? All right, so let's do something really quickly because I have to get on a call. Why are you doing this tonight? This was 15 red and green, 43. Popped to 52, so that was a winner. This was 15 red and green, was 14, popped to 18, so that was a winner. And I'm saying that because we have the red marks on it, which means I put this on the super duper list, which means I remember the day that I put it in our chat. So let's just go over if they won or not, you know. This was 16 red and green, was 18, went to 21. It's, you know, cents in the middle, still over 18, so it was a winner, not a huge one like we'd want. 14 red and green was 1780, was 1950. It's still sitting higher than where it was that day, so that was a winner. Litecoin, I remember talking about this one. It was a 10 red and green at 102, went to 113, so that was a winner. And cake. This was 10 red and green at 694, went to 770. That was a winner. Mike, it doesn't look like anything I would jump in and buy today because everything's having a bit of a rally. So I'm going to put crypto with everything else and just get to it tomorrow. I have some bulk silver coins, which I could use to buy groceries. Cool. Rod, do not volunteer your address. Keep that safe under your mattress or somewhere good, right? All right, guys, I really got to get going. Love everyone. I will see you tomorrow. And please continue doing us the favor. Invite friends and family. It means a lot to us. What does the whiteboard behind you on the wall say? Oh, so we had a couple of offices. We cleaned out one. Abigail cleaned one of the offices when I was, I left for the day and she stayed till like 9 o'clock and cleaned it. And then she wrote on this board, the other office is all cleaned out. Things were keeping. I got put in the drawers, blah, blah, blah. It doesn't say anything like super life-changing, right? All right, but I leave it up there because I like my team and every memory of them means something. So love everyone. I'll see you tomorrow. Bye.